If you want to take advantage of every possible loophole when it comes to your money and the calendar, then the time is ticking because we are close to the end of the year. But the question is, what should be on your financial checklist and how exactly do all of these things work? I've got 6 things on the list that you need to know, and I'm going to show you exactly how to use them. And the last one is my absolute favorite. Let's go ahead and break it down. The first one rather, is going to feel basic, but it is absolutely important. It is reviewing your annual expenses compared to your actual. So your annual versus your actual. What do I mean by that? When you sat down at the beginning of the year or several years ago, many of us sit down and have some imagination, if it's not a spreadsheet, of what my budget is, right? I know that my mortgage is, let's say, $2,000. I know that my subscription to YouTube TV is $65, except it's not. Why do I say that? Because prices have crept up over the last few years for both of those things. For example, mortgages do increase, mortgage payments do increase, and that's usually because your insurance payment is wrapped up into that monthly mortgage. So what used to be $2,000 is now like $2,200. What used to be $65, and honestly, when I started with YouTube TV, it was $29. So imagine how I feel. That's why I cut YouTube TV off the minute football season is over. Savings tip. Anyway, YouTube TV was $65 and then it's $80, right? So what you thought you were spending, you was, hey, my budget might be a little bit cheaper. You need to go back and review and say, hey, are there some things that I need to get rid of? Are there some things I need to change? Groceries have got more expensive. Inflation is real. Go back and review. Here are the things that I know I used to have where I thought I was spending, and here's what actually happened in 2025. What needs to be adjusted for 2026? And you may be surprised. Now I'm gonna tell you this. First, when I say that, I know some of y'all clenched up. I know some of y'all were scared because you didn't want to look at that. It's okay. I've been there. It is okay. Don't look away. Don't look away. I'm talking about you right now. Okay, it is okay. The whole purpose is to figure out what is going on so we can figure out how to solve the issue. It's not a judgment thing. It's not. I ain't asked you to go and look at your Uber Eats. No, that's a different story. Okay, we ain't talking about that. We just say, hey, which one of the subscriptions do we actually not need anymore? And you can also find out what deals are there and what things you may be duplicating. We can find out deals later, but that's the main thing. What is changing here? What do we think we were paying, and what do we actually pay? Next here is tax loss harvesting. Now, I'm not going to get into too much detail. I think I've done an entire video on that here. Tax loss harvesting is the ability to sell off stocks. I think the limit is about $3,000 that you can write off on your taxes for stocks that you lost money on. Now you can only do this unless unless you just bought the stock like 30 days ago. Okay, so there's that. You can consult an accountant to get even more details into this. But for example, if I bought a bunch of stocks and I lost money on one of those, and that is around $3,000, I can write that off and reduce my taxable income. Again, up to $3,000. Now, there are some apps that you just press a button and it does it for you. I think M1 Finance does this for you. So you can go out there and see what apps and advantages are there to be had and can make it easier to decide what stocks you want to sell. Once I do this weekend for myself, that is one thing that I do pay attention to, assuming any of my stocks lost money this year anyway. I'll actually check. We'll see. We'll do a video about what stocks made money and which have not, because you guys know I do check my account twice a year. So we'll see. We will see. But if you are the type of person that wants to make sure that you have all the things you need to succeed financially in 2026 and you have someone in your corner, then you're actually not alone, because I have more than 15 people already signed up on my calendar, and you want to be the next one on that list. Go to buildingbread.com/call-Kev. Again, the calendar is filling up. Those calls are free as well. So buildingbread.com/call-Kev. Let's go ahead and continue with the list. Next here, we have beneficiaries. Update your beneficiaries. I tell this story often. I'm not going to go into huge long tirade, if you will. But your beneficiaries, these are the people that your money goes to should something happens to you, should something happen to you. These are for primarily listed on your retirement accounts, primarily listed on your bank accounts. On your bank accounts, these may be known as POD, payable on death. These are very easy to change out. These are free to change out. I sat with someone earlier today to just double check that his retirement accounts had the correct people on them. I've had situations where an ex-wife was on there. I've had situations where, his, 2 kids were on there, but not the third one. Do this on an annual basis because it's not always a morbid situation. It could be like, hey, family expanded, just got married. You want to make sure mom still ain't on there, but wife is on there. Or you might want your mama and your wife on there. I'm not here to judge. I'm just here to follow out those instructions and make sure you're in the right spaces. But I can't do that, or you can't do that, unless you go through and check and make sure that those things are absolutely updated, because it is extremely important. Not doing it means that money goes to the state and they decide where it goes, and it can also be expensive rather, because they do the whole estate process, and that's costly, and they have to hire a lawyer and all that type of stuff. And it might eventually go to that person that you wanted it to go to, but you're not going to be here to say so. And what you thought was $25,000 ends up being 15 or whatever, right? So be very careful with it. This is also an opportunity, and you only got but a few days left, charitable giving. If you are looking to lower your taxes or just be a nice person, right, and donate some money, this is your chance to do that before December 31st. So make sure that you make a list of charities or churches or wherever it is that you want to give. Make sure that they are, 501c3 organizations. Don't just be giving out to random people unless, again, you are doing it out of the joy of your heart and that's what you want to do. If you're doing it for tax purposes, make sure they're a proper organization and that you get the proper paperwork to give to your accountant to write this off on your taxes. Then you have your contributions. Contributions to your 401k specifically, you only got but a few more days to do that. And a little trick here, right? Unless you've already hit your max or you're really, really close to doing that, if you have a pay period left, this is that chance where you can say, all right, look, I only got but, so many days left. I'm going to go ahead and bump this up just a bit. I was already contributing 14%. Let me do 16%, right? Just one more paycheck, putting just a little bit extra in there, and just to one more push before the end of the year. That's something you can do for yourself. And if you feel like you can afford it, just go and leave it there. Go and leave it there and make 2026 even richer for yourself, and see how you feel after that. But in either case, this is the opportunity to contribute what you can across all of your accounts for 2026, but especially those retirement accounts, including your IRA and your Roth IRA too. Now here is my favorite trick. If you are someone who's either a 1099 employee or you get 1099 income, what I mean by that is contractor income. For me, I'll do a speaking gig, or I book sales or things like that, where I'm not a true employee, but people will pay me and send me their tax form after. You can do deferred income. For example, I spoke at an event earlier in December. I sent the invoice not too long after. I have not gotten paid. Now, I could be like, hey, pay me right now, and really urge them to pay me before December 31st. Now, if I do that, I would be taxed and will be counted as my taxable income for 2025. What if that pushes me into a new tax bracket? That might not be the smartest thing for me to do. I could defer and just push that into 2026. That there is deferred income. I could just wait and then say, hey, look, this invoice is due on January 1st, right? Or when I sent the invoice, I could have said this is due in 30 days. That is how you defer income, and that is something that you could do. There are some people who get massive bonuses at the end of the year. You might be able to ask your employer to say, hey, look, I love this bonus. I appreciate you. Can you defer that bonus to the top of January instead? Because this might push me into a different tax bracket. Again, talk to your accountant and see if that makes sense. You can also adjust your tax form to change how that taxation works too. Again, talk to your accountant on how you might want to change those things too, and see if that's going to be beneficial for you. Because taxation bonuses can be a bit complex. However, this is your only chance to do it. this is your only chance to do it, and it may be a very niche situation. But deferring your compensation, deferring your pay in cases like this can be very, very powerful if you are like right on the line of getting pushed up into a new tax bracket. So see if you can play around with it, if, keyword, if it makes sense for you. If you want to learn more about money, finance, and investing, then you want to check out this video right here.